Hello and welcome to the Closing Beat, everybody. Happy Thursday to you. How's it going out there? Everybody good? Another day, 2024. The market's still not sure about giving us a little bit of a rally there, but that's okay. You know, we're here, we're watching, we're going to learn some stuff here today. We are financial advisors at Jazz Wealth. While other advisors are playing checkers, we are playing chess. And speaking of chess, Charlie already starting to invest for his brand new baby. Charlie just had a baby yesterday. He's our developer here. And that is Eli, right? Eli. Well, short for Elijah. So congratulations to Charlie. Fun fact, everybody, they didn't know if it was going to be a boy or a girl, and they genuinely didn't know. This is their second child. And so we were taking office bets, and everybody picked girl. I picked boy. Your boy got some money in his pocket now. That's all I got to say there. So congratulations, anyways, to Charlie there. Wine and Wealth tonight for our clients is going to be focused on the sort of like where do we start, right? Like it's January. We can't accomplish everything in 1 month. Where do we start? What do we focus on? What's important to put our attention to so that we're ready as the rest of the year goes on? I'm going to carry this forward throughout the year. Naturally, you know, taxes, no need to focus on that right now. So we're going to go through that tonight. I will show examples. We'll go through all the good stuff there. And yeah, it'll be a good time. Also, if you are following the market, so we continue to have this little pullback. We'll talk about that in a second. But notice today was a bit of a narrow range day. And it continues to fascinate me how investors are just clearly telegraphing where they're going. I just think it's pretty cool. I'm not saying you chase it or do anything with it, but it's just cool. Normally, you can't get that good of a read on the market. So I'll say that 2024 has started already by being very transparent, even though we're moving in the wrong direction for a lot of you. That's pretty cool there. It was a slow news morning. And, you know, people always are like, where do you get your news from? You know, I'm like, I don't know, you got to look everywhere because you definitely ain't looking at CNBC this morning just for fun. I don't pick on them. It's fine channel, whatever. But here's where we stood this morning. Article, Elvis show to debut in London with an AI-generated life-size holographic Elvis. Like, okay. What's financial about that? Next, Harvard University president, we all saw that. She had to resign there. What does it mean for future applicants? Okay. So I don't know. It has nothing to do with my money. Red Sea ship attacks again. That was yesterday. Okay. What investors need to know? We know it already. They shot them. They fought back and Iran's mad. All right, and then you can sign up for this thing here. Good news, bad news. Record dividends paid to investors in 2023, but buybacks plunged. What's the good news? It's 2024. I'm not sure I understand. And then my favorite one of all at the bottom. Why Pop-Tarts are the only toaster pastry that matters. I'm not making that up. I swear on my life, it's there. I don't know why, but I do agree. I don't need to read the article. Pop-Tarts are hands down the best. There's just no way around that. But that's how you can tell it was a slow news day. And that's okay, right? There's going to be these days. We have a moment in time where people are content to take some profit and let the market pull back. It is pulling back. It's happening. This is more than fine here. For the S&P, we had started the year now with back-to-back days losing over 0.5%. It's a little bit odd. There's only 4 other times in history that that's happened. The trouble is, one, it's a lack of data. I can't go back and say, hey, this has happened 64 times over the life of the market, and, you know, the odds of whatever. This is what happened going forward. 4 data points is not really a good sort of subject matter there. But if you're curious, it's a coin flip. Half the time it was positive for the rest of January. Half the time it was negative. And that's basically 2 times positive, 2 times negative there. So where we end here with this part of the discussion is it's an opportunity, but we don't know how much of an opportunity. right? Just like we talked about yesterday. We continue to see that, and not all areas of the market are falling, by the way, but it continues to give you that pullback opportunity. For those of you that dollar cost average on a weekly basis, great, you're super excited. At some point, your deposit will go through and you get to buy cheaper than you could have over the last 2 weeks. For those of you that have cash and you're looking to put money to work, well, it's getting better. I don't know that you're really excited here, but it's getting better. Sector-wise, who was your leading sectors today? If you didn't know, could you not take a really good guess? If don't look, right? If you'd watched the show each day this year or watched the market, and today someone said, what were your leading sectors today? And you had no idea, you'd have to say, well, I'm gonna go with the odds. It's gotta be financials and healthcare because that's what's going on so far. Money's coming out of tech and going to financials and healthcare. And if you were wrong, at least you played the odds there. Well, you're not wrong. Utilities, I'm sorry, not utilities, healthcare. Healthcare, your leading sector, hit new highs here today, and financials as well. The strength of it, or the momentum, dried up a little bit, but that's okay. They were still the leaders. You can see, if you look at the charts there today, all the momentum, and then it sort of just faded away like hot air, right? Just kind of all of that steam came out there. Same in healthcare, right? It started off strong, and people said, wait a minute. I don't want to pay more. It's had a great run. I don't want to pay more. So a little bit of steam came out. That's the one little warning there. And tech, although, you know, it was the clear winner last year, over 50% gains. We're going to try something in a second here, actually. 50% gain, greater than that last year. It is the worst performing sector this year so far. Big pullback there, down 4% so far. So if you've been looking to buy tech, like I said, I don't know that this is the time you're going to get excited, but you're at least paying attention because of the discount there. If you want to use the research site to do this, I'm going to just play a little experiment with you here. Remember, we can use the calendar search now if you want to know anything about January, right? Because if you say, okay, tech gaining more than 50% in a year, well, when we go do the forward stuff, I don't know, 35 years. That's plenty, right? When we do the forward analysis, there's one. If we say forward 1 month, that's January, right? If you use the rolling search, that's a different thing. So this is the one time a year we're using that calendar search and figuring out what the month and next month tends to look like. That's pretty cool. Okay, so yeah, you can see it's really rare. 2023, tech sector gains 54.68%. Obviously, we don't know what's going to happen next. The only other time it's happened was in 1999. We gained 65%, just for fun. Come on. Let's get rid of this. Let's get rid of this. Let's look for using that data. All right, it's only one data point. So we're essentially asking what happened after tech gained that 65%. Just tell me forward-looking what happened. Well, in January of 2000, we were down 6.16%, right? In the first quarter, we managed to recover and went positive. Over the next 6 months, we gained just a touch more, but the year turned out to be a disaster. And it's 2000. Any economic or market historian would know why. So the moral of the story is, for January, when you have such a strong gain like this, we're down 4 already. And it doesn't even feel that bad, right? You were down 6 over there in 1999. We're certainly on pace to do that, but it gives you an idea that, okay, we're using one data point, but it's still, you know, it's normal, right? The Dow. So I saw this today. The Dow gains 100 points. Okay, why? What happened, right? We know that healthcare and financials have been leading the way. You know, you've been following along, you know that. So if we know that the Dow is a price-weighted index, not market cap weighted, but a price-weighted index, and healthcare is the leading sector, could you not guess why the Dow was up 100 points? Like, you wouldn't even have to look at it. My first thought would be United Healthcare because it's the most expensive. Yeah, it had a good day, or a decent day. Okay, so that's probably part of it. Amgen had an even better day. Okay, so that was your leader today. Amgen added the most points to the Dow today, probably by just a tiny, tiny little bit. And then Merck, okay, cool. They added just a little bit as well. So three of the top 4 names were all healthcare. So when you see that on TV and you're like, oh, the Dow, it was up over 100 points at one point, you put those pieces together and you go, I don't have to wonder why. I can already tell you, like I can see it, right? So it's a wonderful thing. It saves you a lot of time to have to do that. That's the Dow. The NASDAQ, different story. Getting a little weak there, and we know that a lot of that has to do with tech, so we don't need to beat up on that at all. Gold, a little bit of a bounce after that pullback. The Russell was, at one point it was, and today, technically, no, I'm sorry. At one point it was the leading index. It did not finish that way. Bonds continue to pull back price-wise, which means rates are going up, okay? So just, I point this out because I talked about it in the Notes from Jazz at the end of the year that I did, where we talked about mortgage rates not likely going lower. And I pointed all this out, the bond market. You have a bond market that is extended in the short term. That doesn't mean it has to fall apart. It just means, hey, if it pulls back, that would be totally normal. Anything in life that gains in value rapidly tends to take a break. Most notably, you guys are probably know those car prices. The price of eggs before Taylor Swift stopped it all. The price of houses during that whole real estate run up there that we had. All right, the same happens in the stock market, in the bond market, in the futures market, in currencies, commodities, whatever. It's always the same. So that's what's happening there. And I don't think anything happened in the oil world. Yeah, a couple times I looked at it today. There was not much going on, and that is how the day finished. All right, let's do some stocks in the news. I'll take your questions. We got to get ready for this Wine and Wealth tonight. Help people get their dough straight. jazzwealth.com, right? All right, Walgreens. The stats are true, right? Yesterday we said, I think it was two of the last 8 earnings reports were the only times it was positive. Now we're 3 of 9. I'm sorry, it was 3 of 8. Now we're 3 of 9. It's just what's been doing. It's the mood of the stock lately. It doesn't help that they cut their dividend 50%. They beat on earnings, by the way. That doesn't help there. The main gist of what was going on is what restaurants are dealing with, but obviously this is not a restaurant. They're trying to figure out their costs. Their costs have gone up. And the fancy way, if you want to look through their earnings transcript, I promise you they said this. The fancy way of saying that from a C-suite level is we're trying to like right size, right? Right the ship in terms of our costs. They said something like that, right? Guaranteed. And that's fine. It's not fine now if you're an investor, but it could work out over the long run if they can get their costs in line. That was one of the big focuses there. I will add one other thing that you're probably not going to catch if you read articles or whatever on this, because they probably don't point it out. They have a bond coming due in November. And this was talked about 2 earnings cycles ago, I believe. There was an analyst that pointed this out. One of their bonds is coming due. Their debt. Right? So essentially, think of it like a personal loan. It's coming due, a balloon payment. Well, it's almost $2 billion. And I looked real quick. That's almost 20% of all the debt that they have out of there. So they're going to have to refinance. And what are they going to do? Refinance at a higher interest rate, because interest rates are higher now. Or maybe that's why they're cutting the dividend, is to make sure that cash is available. I don't know what their strategy is there. But just looking at the numbers, you got some decisions to make. Fun fact, Constellation Brands reports tomorrow. They also have only been positive 2 of the last 8 earnings reports. So hopefully you guys have been drinking a lot. We'll see what they say. Eli Lilly. Cody, this thing. This is it. What did I say? The theme. I can't even see you over there, wherever the lights are. One of my themes, right? And I was talking about the obesity drugs.
Fat drugs.
Well, that's what I said, but I
was doubling down for you, but go ahead, yes.
Okay, well, anyway, so what we say, that's going to be a theme. It's going to be a craze this year. Today, Eli Lilly says, we're just going to sell those drugs directly to a consumer. Just come right to us. You don't even need to go through somebody. Just come right to us. The craze continues, man. That is incredible. I don't know what they called it. I started reading about it. I'm like, it's amazing. That's what they're doing. So anyways, let's move on. And naturally, the stock was higher, so you understand why that happened. That did hurt some of the others that will lose out on that competition. They may choose to do the same thing. I don't know. Let me go back over here. Go back to where I was at. Try to get focused. We happen to own Eli Lilly, by the way. So we have owned that for some time. So we have a sizable gain on that one, and it's only getting better. Apache is buying Callan. It's another public company, CPE, I believe is the ticker symbol. Yeah, this company's getting bought out by Apache, so Apache down a little bit. That tends to be the case. Spirit Aerosystems, we happen to own that one. It got an upgrade today. It was one of our top performers in our portfolio. We're happy with that. And then the one that got a lot of attention because of how it performed, but also because it was a light news day, Mobileye. So the key here was excess inventories. If you don't know, Mobileye makes these chips. They call them the IQ chip, something like that. And the concept is, you know, when you get in your car and you have the screen there and it's like the Lexus thing or the Toyota thing or the Buick thing or whatever car you have, they have their own like interface, right? Well, that's part of what they do, but the other part is on that self-driving, that sort of reading the road, to be able to compute all of that inside of a chip. That's what they do. The trouble is we had COVID, so there was no demand for their chips, right? And then all of a sudden there was a lot of demand for their chips. And then demand started to come back down and they said, we better get a lot of those chips because the supply chain is a bit of an issue here for us and we don't want to be stuck without any chips. So all the top automakers bought a whole bunch of chips and put them on the shelves. They haven't needed those chips yet. Who does that affect? Mobileye. They said, well, shoot. Now our sales are going to be lower, not because we're bad and something went wrong, but because they bought more than they should have. The companies have bought more from Mobileye, so that's a good thing, but not for forward earning or forward revenue. So what they were saying was, okay, revenue is going to be down about 50%. Just take it a step further. Here you go. Looks like a bullwhip. There's in the supply chain world, they use the term bullwhip a lot because it looks like you whipped a bull. You crack the whip. And so what happens is you have this massive snap, and then over time the whip, obviously diminishes. That's where we stood right here. Big demand, COVID, oh no, the world's shutting down. Wait, people want to buy stuff again. Lots of demand and oversupply, and now things have calmed down. Automakers aren't making as many cars as they were. Still doing fine, but also we have the supply. We don't have to call Mobileye anymore, at least for the moment. So the next question you have is, okay, well, when will these automakers go through their supply, right? Maybe I like Mobileye. I don't like it now, maybe, but they'll work it out. When will they go through it? A lot of analysts were pointing out the second half of 2024, but you don't even have to look at the analyst reports because Mobileye themselves said it will be the end of 2024 before those inventories start to return to normal. So there you go, a little deeper look into that. Tomorrow we've got, like I told you, Constellation Brands to report. You got a little Fed, one or two Fed members speaking. I forget now, I'm sorry. And that's pretty much it. That's pretty much it. All right. To be fair, yeah, I did say fat drugs. And that's what you hear people say. I've never taken them. I don't know. But I guess if I needed it, I'd give it a try. Seems pretty crazy. You want the pill that makes them skinnier, muscular? Y'all want that one? I'll take that one. Maybe tighten up the skin a little bit. If there's something you could do with that, that'd be cool. Yeah, get me back into my old pants. Jamie says, curious how chip production materials could be impacted as we move forward with de-globalization. Well, the big question, and I don't know the answer, right? So I'm not going to pretend like I do. But the big question that we read all those back-end sort of analysts portals and stuff, JP Morgan, Wells Fargo, Goldman Sachs, of course. The big question is Taiwan. It has to be, and we know that. But it's a question because we don't know what the lawmakers that supposedly know what they're doing are going to do. We don't know how that's going to play out. So it's a huge question. And I honestly am not smart enough to figure out the answer to that. I will say, by the way, congratulations, right? We just hit, this is not brand spanking new, but it just came to my head. The first time in U.S. history, mark this down, this is history. First time in U.S. history that we've managed to grow our debt by $1 trillion in 100 days. Just 100 days. Hey, there it is. Cody with the applause. So I was telling Charlie, I'm like, congratulations on the new baby. He's already $260-something thousand in debt. How about that? I tease, but definitely something probably don't want to tease about. All right, I have covered everything I need to cover. We got Wine and Wealth tonight. Come hang out if you want to get your dough straight, or at least start to figure out where you're going to focus. I'm a big fan of taking things in pieces. never sit down and try to just do all billion things at one time. We're going to just break it down. What are we going to do this month to make sure you're on the right track? And I will share examples and all that happy stuff. You guys enjoy the rest of your day or evening, wherever you're at there. And we will see you hopefully later tonight. If not, check us out, jazzwealth.com. Come hang out with the cool kids. At Jazz Wealth, we treat you like family. That was going to be our slogan, but the employees here took it a little too seriously.
You bought what? That wasn't in the plan that I built for you.
Oh, quit crying.
Don't spend one more dollar.
I'm gonna start calling you Sylvester because you sound like a real...
Tú siempre estás llorando como un bebé, llorancito.
I'm not mad. I'm just disappointed. That's how you get your identity stolen.
We decided to go with let our family be your family's advisor.